Good evening, everybody. All right. Kind of one of the fine-tuning aspects of candlestick analysis is we're still in an uptrend, but notice how we're starting to see little indecisive trading, and that there actually was selling going on after the open today in the Dow. So that should give us a little bit of concern. Not anything great just yet, but just a little bit of concern that there might be some profit taking about ready to take place. Same scenario with the NASDAQ. This is a good sign of a doji gap up, except for the fact that we haven't closed up above the T-line. So it'll be important to see how these markets open tomorrow. Any weakness would tell us that the NASDAQ is still having trouble getting up above the T-line, obviously. So some of the biggie movers, crude oil backed off a little bit by the end of the day. Oh, I thought it did. Let's see. At least well, I think they actually closed right here. Sometimes when you have the daily charts on something, you can see what happened. Right near the close, they were backing it off, but you can see after hours they started taking back up. The crude oil is still acting pretty good. Gold is still soggy. Came back up a little bit. We're still below the T-line. Still nothing showing any great resiliency in gold. Now, we've also recommended going long on lean hogs, and we went short on the March dollar today with our sell stop at 127.50. So we're in the green a little bit. But notice what happened. This is why it's important to see what type of signals you have based upon the direction you're going, or think the trend is going. Just look what happened today. They opened it, took it up, and then came back down through where they opened it and started trading it lower. So right now that shows there was buying, but then the force continued to push it down, and that little booster up there usually indicates more force to the downside. Is there any group that meets in South Louisiana or South Mississippi? Okay. All right, let's take a look at, I didn't check any of the grains. Looks like soybeans are starting to bounce back up. And wheat, same scenario, except notice where wheat is. Let's get rid of this. Right here at the T-line area. Let's see, F.CT. They had CTEH7. That's cotton, and you can see cotton's not going anywhere with any great resolve. But the fact that we can see that crude oil is continuing to move up nicely. I don't know what this is. But you can see where it was starting to trade. Now that's the March. Whoops. Oops. No, oh, I know. It was once the January. Ah, it is January. All right. Oh, that's why it looks better. Here, let's get this one off. All right. So The January crude is about ready. Let's make this smaller. This is where it peaked out before. This is where we're trading right now. So it might come up here and test that 52.70 range again. But that's making a lot of the gold or a lot of the crude oil stocks pretty strong. So our recommendation on CRK was based upon just observing the obvious. And this is kind of one of the aspects that we went over during the training session, that the more elements that we can put into our analysis that tell us there's been a reversal. For example, a bullish engulfing right on the 50. A left-right combo right on the 50. The bullish engulfing with a booster behind it. And then the next day they gap it up. That pretty much tells us exactly what happened here, and while this going on, the stochastics are heading up. That puts us in a situation where we can kind of figure out where our next trend target will be. Whoops. And so if we just take something like this, that becomes our target. Now, will it get there? Who knows? But at least we know that is a probable target that a lot of people will probably be watching. And the advantage we have is it gets up here, we can see what type of signal it creates when it gets there. No. All we're really looking for, Peter, is a gap up. Because what does a candlestick buy signal represent? That there's been a change of investor sentiment. What does the gap up the next day tell us? That they're still confirming the signal before. So it doesn't matter how big the gap up. Now, obviously, if it gaps up here, now we're in the range where it might be profit taking. But this gap up right here pretty much told us that after a buy signal, there was bullish confirmation, which is exactly what we would look at. Would you please add in your comments if it's too late to get in? I would suggest you could still be buying. Now, remember, the buying was right here, confirming the signal. As we go up, the risk-reward factor gets a little bit testy, meaning we've already moved. The further we move up doesn't mean we're not going to continue up. It might mean there's going to be some profit taking along the way. So down here is a high probability purchase. Up here, if you're buying, you've got to be a little bit more conscious of the fact that you might see a couple of days of selling or moving sideways, waiting for the T-line to catch up. Okay, all right, Paul. Okay, so for some reason, so these are kind of hodgepodge of things in order as far as, here's a good-looking chart. There's your fry pan bottom. Notice where it closed today. Right here at the 50 with kind of a little doji day. Right at this same level. What's this tell us as far as our entry strategy? Well, we know if it opens positive, or we know which way it opens will be indicative of which way they're going to trade it based upon a doji. The fact that we have a doji right on a major support or resistance level, in this case a resistance level, tells us if they open up positive, they're probably moving up positive. What type of pattern, what type of signal? Probably a doji sandwich. We know that if they open up positive, they're going to move it in the direction how they open it after a doji, which means we've got some good move to the upside. Number two, it tells us that the 50-day moving average is not going to act as resistance. And number three, it's telling us we've probably got a fry pan bottom breakout. So if we get up in this area, see if I can do this, we trade above this level. Now where are we? We're way up here in this big gap up area, making our next target at least somewhere up close to the 200-day moving average. Do the overbought stochastics discourage you? No. Remember, we're looking for signals when they're in the oversold area. When we're looking at patterns, they're usually going to break out when we're already up in the overbought condition. So right now, we've got the opportunity to see a lot of patterns setting up. For example, we know where the stochastics will usually be in a J-hook pattern. They won't be in the overbought, they won't be in the oversold, but they'll usually be somewhere in the middle, kind of telling us that the J-hook pattern is in progress, like we've seen in TrueCar. So I'm looking at a lot of the J-hooks, mainly because we can calculate what our next price move will be and where it will be. Big left-right bullish engulfing, close above the T-line, gapped up the next day. Now notice the pullback, kind of indecisive. If we move from here, we can pretty much calculate where our next price move is going to be. If this moved from 19 to 25.5, I guess that's 6.5 points. 6.5 points from here takes us up to about the $31, $32 range. So not only do we have a situation where we can see that we have a high probability trade setup, we also can calculate what our price move is. So depending on your strategy for getting into that position, if it's buying the stock, you know where your target is percentage-wise. If you're buying options, you've got a few different strategies that you might use depending on how much time you have left to expiration. Say whether you want to just buy calls outright or buy a spread. So you get much better feel for what type of strategy to put on and what your best prospects are for each individual strategy. So there's another J-hook pattern. Why is this compelling? Because they broke out through this level. That tells us wave one, which was approximately 5 points, tells us we should be heading up into about the 1450 range. And so the reason we consistently point out the patterns is twofold. One, we know what the results should be based upon wave one. We can see the pattern setting up. And two, what is the prerequisite for a J-hook pattern? A very strong price move. When it pulls back and we get ready for the next move, it's usually a very strong price move. So lots of stocks are going to move up during an up market. We're looking for the patterns that are going to give us a lot more percentage price move to the upside. Yes. Remember, we're not buying at a high price. We're buying coming out of a pattern, which usually tells us there's going to be more upside potential. So look at this one right here. There's wave one, wave two, wave three. Now we're in wave one, wave two, going into wave three. These pullbacks kind of knock out the exuberance, gets rid of the profit taking, and gives you a much more solid move to the upside when the next move occurs. So here's copper. It's a big, slow-moving one, but a very clear pattern, J-hook pattern. So if you're not, if you're more inclined to get into the bigger stocks, these patterns are gonna show up everywhere, whether you're trading a $2 stock or a $200 stock. Wendy's, another one that has good upside potential, basically due to the identification of a J-hook pattern. Fossil, same scenario. Here's your belt hold, piercing signal. There's your profit taking. There's your inverted hammer. An inverted hammer followed by bullish confirmation says you've got an extremely high probability you're back in an uptrend. So always remember your inverted hammer should have one big asterisk next to it when you're thinking about it. Is if it opens positive, trades positive, the probabilities of it going higher is probably 95% or greater. If we know that, and we know where it's happening in a pattern setup, we know what our probabilities are and what our next target area will be. belt hold signals. Remember what a belt hold signal represents. Bulls and the bears, bulls and the bears, bulls and the bears, bears just flushing out, and the bulls taking up all these, or all that bearish sentiment, which means there's no sellers anymore. Means the next move is usually pretty dramatic. I really stocks have to take a break periodically. Sure, not sure I understand the wave significance you mentioned. Remember, Peter, prices don't go straight up or straight down. That's why the Elliott wave theory was so, or is so well, followed. But the most important aspect of the Elliott wave theory is that it tells you that prices move in waves, because that's human nature. Things don't move straight up. Things don't move straight down. They usually go up, profit taking, up, profit taking. That's what causes our J-hook patterns. So, I forget which one we were looking at. So I only look at wave 1, wave 2, wave 3. I forget which one we just did. That's just great. But remember, prices do not move straight up. So I have wave 1. Pulls back. There's wave 2 starting. Or that's wave 2. Wave 3 is the same magnitude as this move. Is the COF? All right. Yeah, so I have wave 1, wave 2, wave 3. Well, I'm not concerned about an Elliott wave analysis for whether I'm wave 1, 2, 3, 4, 5. I'm more interested in what's happening right now, because I'm not going to own this for months or even weeks. I'm probably only going to own it for at most a week and a half, more than likely 2, 3, 5, 7 trading days. So I'm interested in wave 1, wave 2. What's my next move? Wave 3. John, it's not how it moves, flushes out the sellers. It's the fact that it is getting rid of all the sellers. Buyers and sellers, buyers and sellers, and bam, there's lots of selling going on here. And then as soon as you see the bulls start bringing it back up, that means they bought all the selling, which was exorbitant or excessive compared to what the current trend had been. And then when they bought all of them and there's no sellers in the way anymore, that usually starts your next move pretty strong to the upside. Oh, there was a couple other belt holds. You can see what happens down here. And remember, a belt hold is when you're in a trading range and all of a sudden they gap it way below the trading range and come back up into the trading range. And so the qualifying factor there is the gap way below the trading range and into the trading range. Doesn't have to necessarily do a signal. Now, if it closed more than halfway up this candle, it would be a piercing signal, belt hold. If it closed above the previous day's open, it would have been a bearish or bullish engulfing signal, belt hold. But the fact that they gap it down, washing out all the sellers, and then the bulls step in and buy, that tells you your next move is starting. So notice what happened after that hard sell-off. There was no sellers in the way anymore. They brought it right back up to where it was. Now we've got that J-hook pattern in progress with a bullish engulfing signal occurring right here on the 200, and they haven't closed below the T-line. So this is pretty good evidence of knowing what to look for when you hit a resistance level. You can kind of assume that this area was a resistance level. Notice what was happening once we got up there. Hanging man, dojis, hanging man. That pretty much told us that we were running out of steam. Get ready for some profit taking. XON, another one that has kind of a morning star signal right here on the 200, making this J-hook pattern potential very likely. I hate that thing. I don't know what makes those charts do that. Why is that? I got to get those fixed. But if it comes back up through this level after a buy signal, it's telling us we're in wave 3. The symbol was GIII. GII or G3 Apparel Group. BPOP. Another one that's setting up a more mild J-hook pattern. But notice what happened here. Kind of this little Morningstar signal. And then they gap it up above this level. Makes this very simple for an entry strategy. It opens positive. It's going to move positive after our doji. So we've had a gap up. If we start seeing an open positive, you can be buying immediately with a pretty good prospect. Wave 1, wave 2, wave 3 is going to be the same magnitude as this over here. EXEL, same scenario. J-hook doesn't necessarily have to be up, pull back, and up. It can be up, sideways, and then the next move to the upside. Peter, hold on to your individual ones until I tell Jim to do the double line. We'll get to everybody's. IONS, another J-hook pattern that if it starts trading up above this level, let's see if I can do a trend. If you trade up above that level, we know wave 3 is in, has come into effect. ESPR, scoop pattern. The handle we had, now we come back. Now, would we recognize this as being anything good up until this point? No, not until we saw the left-right combo and then the positive trading. And then we could see that there was a reversal with a little scoop. So it makes this very simple. If it opens positive tomorrow up through the 50, we should have that slingshot effect to the upside. Again, knowing what each of your signals and patterns illustrate allows you to quickly identify which price moves have the most potential to the upside. CENX, get ready to be buying this one on positive trading. Also, the J-hook pattern moving in the right direction. Here's SCCO Coppers, or Southern Copper Corporation. You can see kind of the wedge formation. This one probably has a lot more upside on positive trading. And HMST, J-hook pattern. Notice the kicker type signal gap up. Opened here, closed here, then opened positive and went the opposite direction. Pretty strong indication that the J-hook is moving in the right direction. CRR, another one where we've had a best friend signal, a Morningstar signal, and we've closed right smack dab on the 50, which kind of coincides with this downtrending channel. But makes this very simple. Everybody and their brother is watching to see what's going to do. This is going to do at the 50. You don't have to wait too long. If it opens positive, you can be buying immediately, because coming out of the Morningstar signal after a best friend signal probably gets you into a much or a high probability trade situation. I don't know if it would be a long-termer, but it looks like it's probably got a good 35-40% upside going to the 200. Okay, what you're trying to find is not necessarily anticipating which ones are the long-termers just by identifying them right now. What you're trying to do is find the ones that, if they start up, may stay above the T-line for quite a while. We don't know which ones those are, but at least we know when we're setting up, here's that fry pan bottom breakout. More than likely, they should be coming up into this area to fill this gap. So, got a wave 1, wave 2, wave 3, probably taking us up at least to fill that gap. So we know we have a situation where the probabilities are in our favor that it's going to move in the right direction. Sage, another J-hook pattern. How do these lines just keep coming up here? Morningstar type signal. You can be buying this one on positive trading. So we keep looking for the good signals. Notice how the kicker signal on Diamond Offshore started us in a pretty strong uptrend. The belt holds. Here's another one. This is Zoom, Z-U-M-Z. I'd put a buy stop right up here at around 25.65 or so. If it comes up through there, notice where they opened this, right smack dab on the 50 and came back up. That means there was buyers, sellers, buyers, sellers, buyers, sellers. All the sellers came in and the buyers took them right out. It means there's no sellers in the way. That should create another strong move to the upside. And a lot of people ask whether volume makes any difference. Oh, pshaw. Don't have volume on this chart. I wonder if I can't put volume on here. Add study. Volume. You can see there's big volume here in the last few days. But usually you will see a volume spike. Now I don't want those in there. They're ugly looking. I wanted to overlay it. Usually if you see a big volume spike, that means there's been a lot of stock changing hands. Is there a list of stocks you're reviewing now anywhere on the site? No, this was from the analysis of what happened today. So there's usually, what you'll have, Ram, is in the members area, you'll see the 2-3 stock picks that I put up every day. But this is where this analysis is so that you don't have to. If I put out a stock that is $7.20 that we think is going to act well and trades 240,000 shares a day, or another stock that what it does is we're putting out what we think are the best stocks. Well, you might not want to trade the smaller stocks. You might be more interested in trading the bigger price stocks or the Dow type stocks. So as we go through this, there's going to be a lot of stocks that we look at that look good that I may not have recommended, but at least you've got a supply of different charts to look at. Say, oh, I like this one, or I like that one because it fits into my trading style, versus just doing whatever I recommend. The reason I try to teach people how to do scanning, which I think tomorrow night we're going to kind of do a quick kind of scanning analysis session at 8 o'clock. That we'll go through on how to set up your own scans or how to apply your scanning techniques to have a list of stocks so that if the ones that I'm looking at don't work, at least you've done your own scanning and found stocks also that might be working on a day that none of mine work. Or it's not unusual that people, because there are so many eyes out there, people are going to find better situations than just the ones I come across. Okay, on the short side, notice what's happened on this one. GBT, a big, huge left-right combo, kind of a wedge formation. This indicates that if they start trading this one lower, you definitely want to be going short. This was a big, huge reversal. And hopefully a scan thing is not just Metastock. No, I use we have Metastock on here enough times to that if you were doing it, you could. I use TCNet most of the time just because I'm so used to it. So that's how I usually do it. And I use the old system so that you can see how the scans were put together. Now you don't have to do as much. All you have to do is understand what you're looking at based upon actually seeing how the pieces were put together for the formulas that you already have in place on their system. So here's another one. This is shorting the Russell, or short the Russell, which means the Russell's picking up steam. If you can be shorting this one, or you can be buying the Russell. Aetna. Notice you had a bearish Harami, and then it closed below the T-line. So when I see something like this, where's my first indication they might be bringing it back to? Probably the moving averages. But that might not come all the way down there. So I want to throw things on here like Fibonacci retracement numbers. That tells me, all right, here's my first target. Here's my second target. And my third targets are down here near the moving averages. So will it pull back to any one of these? I don't know. What I will know is if it gets here and I see a doji and then a bounce back up, I know this was the retracement the Fibonacci people are watching. If it comes all the way down here, it may coincide with this Fibonacci number and a moving average. So I'm not trying to target where it's going to go. I'm trying to put on the targets where it might go, and because of our ability to see what's happening at specific levels, we can see right where, if there's a reversal signal, why it reversed at that level. So Kiwi, this is where you observe the obvious. The obvious is right now we're in a downtrend. Came back up to the 50 and failed. Notice what happened right in here. A bunch of dojis followed by a bearish engulfing signal, just touching the 50 and selling off. Now we're back down here at the support level. Is it going to support here? Well, if they start trading this lower tomorrow, below this level, our stochastics are telling us there's more downside. Where's our next prospective target? Oh, it could come back down to the bottom of this channel, somewhere down in this range. So again, is it moving there? Right now we just have the prospects that it could move there, and makes that a worthwhile trade. How long do we hold a short position? Until we see a buy signal and a confirmed buy signal. So here's another one with a dark cloud right here at the 50-day moving average, then a close below the T-line. Same scenario. You can pretty much draw a line right down through the tops. So where's our next prospective target? Either down here or even down here much lower. So at least we can see when it's time to be long or short based upon the signals at definite support and resistance levels, and then kind of calculate what the trend has been doing to give us a target for where our next price move might be. So that's about all I got. Tomorrow you're probably going to see this one recommended because this has all the elements of a fry pan bottom closing right on the 50, that if they start trading this higher, they're up here in no man's land. Why do we call this no man's land? Because what is the normal trading practice of most investors? Man, I'm down. If they ever get it back up to where I bought it, I'm going to sell out. Well, there's none here, so nobody's ready to sell out. That's why a gap area, when it breaks into the gap, there's very little resistance. Yeah, I think we'll do the scanning session tomorrow at 8 o'clock. And I'll kind of combine what do we call them? The quantitative signals. Which signals are the best signals, and then which order, so that when we go through our scanning, obviously when you do your scans, and this is the great benefit of candlestick analysis, is if you close out a position, or if you're thinking of closing out a position, you kind of get rid of some of your mental fears that, man, I'd hate to close out this position because it's not quite a sell signal. It may have more upside. I'd look stupid if I sold it and it went up further. But if we can calculate that our probabilities are starting to diminish as far as that price move, and we've already scanned and if I have 3 or 4 excellent buy situations, that we can get by that fear factor of selling out and having that higher risk trade go up again without us, because we've moved our money someplace to where our probabilities and our risk factor is not as great. So we can get through that mental faux that most of that I would used to do. I'd hate to take profits because I didn't have anything to put throw money into or move to, number one. And number two, I forgot what number two was. Oh, but now we have a supply and demand. This one is ITCI. So, all right, are there any... okay, well, I'm pretty sure tomorrow it's going to be it's just for members only, so we probably won't even change the password, the same password. Okay, any general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Okay. CSTM, that's a J-hook pattern. If you own it, you stay long. If you're looking to buy, I'd be buying on positive trading. You can see where it's kind of broken out through this downtrending channel. J-hook pattern should take us up some more. Oops, scrolled past me already. And HBM is still a good trade as long as it stays below the T-line. J-hook pattern. J-hook pattern. So why is this more evident that it's a J-hook pattern? Because when it pulled back, it was very indecisive and it never closed below the T-line. Now we've got a little left-right combo gap up. That pretty much tells us there's still more upside. NVIDIA was heading down but came back up today. So this one, we covered most of our short position today, and it can be ready to be bought if it starts trading positive from here. What attracts the initial buyers in the first place to make a belt hold? It's not the initial buyers. It's where do most people sell? They panic sell at the bottom. Where does the smart money buy? They're usually buying when everybody else is selling. We just now have the graphic capability to see when that's occurring. And that's what causes the belt hold. A mid, you can be buying this one. Broken out. And AKS has been a happy. There's your J-hook patterns. Stay long. Now, we're starting to get some exuberant buying. So as a safety factor, I just put my stop right here at today's open. Shouldn't come back through that level. TRMB. Bullish Harami right here at the breakout. Nothing wildly exciting other than it's probably got the capability of moving up to the top of the channel right now. So if you're long, I'd stay long. I wouldn't necessarily be buying it here. I could buy it here. It just wouldn't be one of my favorites. RY, Royal Bank of Canada, little J-hook type pattern also. Stay long on this one. And Toronto Dominion Bank, all you can do on this one is stay long. Nothing wildly exciting, just a nice steady uptrend. Natural gas, still moving up. Want to stay long on this, I would use this level right here as a stop. Anytime you start getting up in the overbought area, pick a spot that tells you if they came back through that level, that's where the sellers have taken control. TECK is not coming up, Elliot. That might be a lap. TCK came back up above the T-line. You can stay long on this as long as it doesn't close back below the T-line. PCAR, there's your belt hold. So what does a belt hold do in an uptrend? Tells you if there's buyers, sellers, and then all of a sudden they wipe out all the sellers. Now you've got a very strong move after that. Amazon was up strong today. If it starts trading positive, you can pretty much tell there's a trend channel, so that would make at least the 50-day moving average your next likely target. And eBay, oh, not eBay, eBay. Nothing wildly exciting about this one either. I probably wouldn't be long or short this stock. There's just no direction to it. Centra, oh, big spike up. If that was true, and we can check out to see if that was true. Yes, it spiked up this morning. That's the 5-minute. That's the 10-minute. That usually means they took out a lot of short sellers, then did a lot of profit taking, which tells you if it opens positive tomorrow, the profit taking's over. They're still moving it up. And this one has a nice little bobble type J hook. Wouldn't be afraid to be buying this one with your next prospective target being up here to the 200. Zum we did. Zum has that belt hold. I'd be a buyer if it comes up through the this top level. Chesapeake. Just stay long. Once again, you're gapping up in the overbought area. Put your stop right here. Shouldn't come back down through this level. Kemet, all you can do on this one is stay long. Use the T-line as your stop. Whiting, I'd still be buying this one. They will have a pipeline coming out of the North Dakota area pretty soon. Notice what you have here. Fry pan bottom, whipsaw, big gap up, best friend. Look for a 45 degree to come off of here. CSX, just stay long, steady Eddie. NetEase, morning star type signal, bullish engulfing signal. Wouldn't be buying it yet, but I'd be buying it on positive trading if it breaks this little downtrending channel. So still needs to see some more upside. CLD, stay long on this one. As a matter of fact, if it comes back up through today's open and tomorrow's trading, you can still be buying this one because of the prospect of here's the trend channel, here's the consolidation. Usually what they do is they bring it right back up into the trend channel, which would give you approximately about a 50% upside potential. Freeport, J-hook pattern. You could still be buying this one on positive trading. At this point, if you buy it, just use the T-line as your stop. Lulu wouldn't be long or short this one. It's showing nothing. Needs to break out, obviously. And CVS, there's kind of your belt hold type situation. The fact that you're above the T-line probably tells you at least your upside target is the 50, which is this downtrend. So that would be my first target, just using the T-line to get there, or staying above the T-line to get there. ACAD, not one of your better looking charts. You've got now the prospect of coming back up to the 200. there's really nothing of any great major consequence so far in this one. And FEYE, same scenario. You can be buying this one. Would rather buy it above the 50, but you still would have to break this downtrend. Another one that I wouldn't be real excited about. It's just kind of a ho-hum chart. And INSEE, nothing here yet. Just stay. If you're short, you stay short. However, you're getting in the oversold area and you're starting to see some indecision down here. If you didn't close it out today because it traded back up above the doji of Friday, get ready to close it out if it trades back up above today's high. Can you repeat the last bit on ITC reading for the large gap up? How does volume play into this, especially if there is some announcement like a pharma company, ITCI? This one is more of convergence analysis. We know we've got a fry pan bottom. We know we did a doji type day right at the 50, a major resistance level. We know it's going to move in the direction of how they open it after a doji, which if they opened it positive, we'd have another day like this. If we have another day like this, that takes us up just above this level, puts us into the gap area, which means there's no resistance. Then you've got plenty of upside potential on this one. There's the Restoration Hardware. That one you can be buying if it comes up through, let's say, the 37.60 area. Showing you your next wave to the upside. Kindred, you can be buying this one. Not anything wildly exciting. If it breaks this resistance level, it can probably come up here, which is also another resistance level. It wouldn't be. Yeah, you can be buying it, and you've probably got the prospects of filling this gap, which means you're coming up to the 50, which means you still have about a 15% upside for this one. And wage, I would rather pay $75.50 for it, knowing that it broke through this congestion area. You do have a little Morningstar signal right here. AK Steel, we did. Just stay long. Use today's open as your stop. BMC, it's starting. Still nothing wildly exciting, probably until you get above this downtrending channel. So I'd rather pay $31 for it, $131, knowing that it broke up through that level. Okay, we did those. Mankind. Another one that you can be buying on strength. Just make sure your volume stays pretty good on a 58-cent stock. It's you want to blow up over 1 million shares to get in and out of it easily. STM, nothing you can do here is just stay long as it stays above the T line. And CVRR, still nothing. You're kind of caught in the sideways wedge. I wouldn't be long or short this one right now. There's just no direction to it. Cara, I like. We recommended Cara this morning. I'd still be a buyer of this one on positive trading. That would put you into a McMuffin, which is your Morningstar followed by a doji sandwich, or your morning sandwich telling you there's going to be more upside, or a wave 1, wave 2, J-hook pattern, wave 3. FGP, another one you can be buying on positive trading. You had the bullish engulfing, gap up. Now you're right at this resistance level. If you're buying this one on positive trading, you've got a good, probably 30% move back up to the 50-day moving average. Alcoa, J-hook type pattern, another one that if you like the biggies, you can be buying this one. Obviously, you watch to see if it can break through this level going into wave 3. And Halo, don't buy this until you see it close up above the T-line. And SGY, you can be buying this one, but obviously with the dojis, you know what to do. If it opens positive, it's coming up here to the 200. If it opens lower, you're probably going to be caught in a little bobble for the next couple of days. ARE, the S&P regional banks, just stay long. And AVGO, nothing to get real excited about on this one either. You do have a spreading pattern. You can see how it's spreading out. If you're buying it, you've got to be expecting a big whipsaw to the upside. Right now, there wouldn't be anything that would have me really attracted to this one. No. How they get to the new highs. Kevin's question is, among so many J-hook breakout patterns, what will be your criteria to pick up the best of the best? Since some of them are in new highs. Let's see, I want to see how they got there. This one has a little doji, a little bit of a gap up. What was that? Oops, that's not good. TrueCar. So what I would be looking for is something that tells me that the force of the next move is going to be fairly strong. And I thought I had one that fit into that description. I can't find it. So when I'm looking for a something that tells me that I've got a reversal and a gap up, that's what I want. Oh, TCK changed to T. All right. TECK. Apparently it's not on their system yet. Lending Club. Bullish Harami. If it opens positive, you should cover your shorts, and I wouldn't go long until they can get it above the T line. SEMP. Had that little slow curve breakout. It backed off today, but I'd still be a buyer of this one, especially if it came back up through today's open. That would tell me we've got a good possible run back up to where the gap occurred. All right, good, James. Twilio looks like it's trying to bottom. When I say it looks like it's trying to bottom, we had a little bullish Harami doji. Stochastic's not quite to the oversold area, so we're watching to see if it's starting to base in here and coming back up through the T-line. And notice where this is occurring. Right about the same level it bottomed out before, so that gives it a little bit more credibility that might be the bottom area. Let's see. I don't know what the target would be here. If this is wave 1, wave 2, this was 9 points, maybe up into the $53 area if it breaks out. Richard, remember we still have a boo, B-Y-N-E. We still have a Morningstar signal. It has to open positive and trade positive. If it opens lower and starts trading lower, it pretty much tells us they failed here at the T-line area. So this is, again, that important aspect of the halfway point. If this was the candle that told us the bulls were in control and they were able to close it more than halfway down this candle and they closed it back below the T-line, yes, you should have been out. If you didn't get a chance to get out, now you only have one criteria to look for tomorrow. It has to open positive and trade positive to stay in it. Infi, yeah, nice little fry pan bottom, breakout through the 50. You can be buying this one, just also be aware of what the volume is. Want to make sure it's got plenty of volume. Edit, you can be buying this one with the anticipation that here's your next target. So that's a good 20, 25% to the upside. Dean Foods, another one that if you had stopped out before and got back in, or you can be buying it on positive trading. Notice what you're still doing. Kind of that 45 degree off of that big price move. AGX, same scenario. If you stopped out the other day, you can get back into this on positive trading. And Cronus, same scenario. If you stopped out after the left-right combo, you can be buying it back on positive trading. Just to be safe, if I was buying it back, I'd want to see it get back up through the highs. CRC. Let's see. CRC, fry pan bottom, staying longer. Let's take a gander here. Yeah, it's not a real clean. Well, I guess it is a pretty big fry pan bottom. I would stay as long as it stays above the T line. He really didn't have any sell signal here today. More than likely, you still have a 45 degree in progress. Yeah, the spreading pattern is the opposite of the wedge. I forget which one it was. But it looks like the opposite of something thinning. It spreads out, and usually at one of these parts where it spreads out, you either have a big, huge move up or a big, huge move down. Because Harry's asking why the difference on the two lines. Because some people trade the stochastics. When the stochastics cross, they sell, or the stochastics cross, they buy. We're only looking at it to see where we are relative to where we are in this the trend. If you're trading the crosses based upon a reversal, usually you're going to be a day or two late after the signal. It's much more confirming to see the signal and go in it, and then usually a day or two later is when the stochastics cross. I guess it'd be could call it a megaphone. I just always called it a spreading pattern. PBF. Nothing wildly exciting until it gets back up above the 200. It's probably in an uptrend. I just want to see more confirmation. Okay. So guess with that, we'll call it a night, except I know Pat doesn't like me to mention this. This Thursday and Friday on Amazon, there's going to be a free download of Who is Santa and How do you get to the North Pole for your Kindle or iPad or whatever. So I will put the link for that on Thursday morning. So it's just a free download for Who is Santa and How to get to the North Pole. The Stochastics oversold and overbought, 20 and 80. Santa rocks, that's right. Are the Keltner channels of value? Alan, I don't know. So instead of asking me that, put them on the charts and test it. The nice thing about candlesticks is we know the basics of candlesticks work very well. That's why they've been around for 400 years. I didn't have the T-line on until, I don't know how many years back. But when Rick called and said, try it, I put it on because the worst case scenario is you put something on your chart that somebody wants to take a look at and it doesn't work, you can take it right back off. So I've still got the basis of what works the best, which is the buy signals in the oversold area or a pattern breakout. Sylvain, good. Thank you. All right, everybody, have a good evening. We will see you bright and early tomorrow morning in the chat rooms. We'll see you then.